Tariffs and their potential impact on pricing and sales are a popular talking point once again for business leaders. The number of tariff mentions on earnings calls this quarter approaching 2018 levels. For consumer goods companies, we heard from Colgate this morning saying they plan to assess and mitigate any impact of tariffs where they can. And Procter and Gamble CFO has said what can't be offset with productivity will be offset through incremental pricing. Joining us now is Filippo Falorni, the lead analyst and vice president of U.S. Beverages and Health and Personal Care at Citi. Filippo, I promise we're not talking gambling, we're talking Procter and Gamble, but I want to start broadly with tariffs. And as you look at this consumer space, how do you think tariffs impact the sector and sort of sort through which companies get hit the most and which companies might not be impacted that much?
Yeah, absolutely. Thanks for having me on. Look, the tariff debate has been very important in my space since really Trump's election in last November. And really there's a different companies that we've been studying and kind of trying to understand the impacts. I think Constellation Brand is the one that comes up the most within beer because they do manufacture the entirety of their Mexican beer business in Mexico. They have two locations currently of breweries and a third one in construction. And therefore, they will be clearly severely impacted by the tariffs. They would also be in a relatively disadvantaged position because most of their competitors would not have to take pricing in result of tariffs, given they compete with Anheuser-Busch or Molson Coors, which manufacture beer domestically in the U.S. So they're clearly the most exposed in my coverage. Brown-Forman is another one. For them, it's mainly a retaliatory tariff. Obviously, if the U.S. puts tariffs on the European Union and some other countries outside of Mexico and Canada, they would also be impacted by potential retaliatory tariff. And obviously they export American whiskey with Jack Daniels into Europe and other parts of the world. So that would be the biggest risk, in addition to the tariff on their tequila business, which obviously it's imported from Mexico. And then you mentioned Colgate and Procter. They typically have more local production across the world, but they do import certain products. For example, Colgate, they manufacture some of their toothpaste in Mexico. So they would also be exposed. They haven't really quantified the amount of manufacturing that is done in Mexico. But obviously, as they talked about today on the earnings call, they will look to mitigate the impacts. But if they can, they will result in higher prices for consumers.
Filippo, how much margin, though, is there for these higher prices to be passed along to the consumer versus many of these consumer staple companies just being forced to eat some of that higher costs?
Yeah, that's a good question, Sean. I think, look, we're coming off 2-3 years of very elevated prices, as you can see in the CPI over really the last 2.5-3 years. Now companies are trying to shift towards volume growth and so reducing the amount of pricing that is taken in the marketplace. But ultimately, look, they will pass at least a portion of the tariff. That's typically what has been happened in the prior examples, also in 2017, 2018, in the first Trump presidency. So I would expect them to pass at least a portion, probably not the full amount, but you will definitely see inflation coming back in many CPG categories.
Filippo, we've been talking a lot about sort of what's priced into the market here with tariffs, right? And let's roll through, maybe we don't get 25% tariffs on Mexico and Canada, as President Trump has said. Are there stocks that have been significantly beaten down by the talk of tariffs that are sort of intriguing to you from that perspective?
Yes, absolutely. If you look at Constellation Brand, that stock is down over 17% year to date. Tariff has been one of the major concerns. Their fundamentals were also a bit softer last quarter, but really the tariff risk is predominant for them. And as I mentioned, they are in this competitive disadvantage if tariffs were to be implemented. And so if on the other side, if there's no tariffs, that's the one that I think could probably see the biggest positive reaction in case of more of a negotiation between Mexico and Canada, potentially to, again, renegotiate the USMCA deal.
All right, Filippo Falorni, always great to get your insight. Thanks so much for joining us.
Thanks for having me.